Hello traders, it's 8:02 a.m. Chicago time on Wednesday, the 9th of October 2019. Please let me know if my microphone is running hot. Doing some recording in the evening and I'm adjusting the audio and it may be a little bit different than last time. Anyway, this is episode number 1613 of the Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Um, Overall, risk on sentiment this morning as we come in to a night that had some really active news events. Some of these include the announcement by the Chinese government that they will be looking for some sort of partial deal with the U.S. tomorrow, despite the blacklisting of some tech companies and visa restrictions by the United States. Then later in the session, the Chinese offered to buy an extra 10 metric tons of soybeans, which caused another pop that's seen as another concession. Seen as another concession. Let me turn up the sound here a little bit. Seen as another concession, and then we also got news um, from the EU that there's a major concession being permitted on a double majority in the Northern Ireland Assembly to leave the new Irish backstop after an unspecified number of years. This is starting to look like we may get a Brexit after all. So all of that has caused participants in the extended hours in Europe and in Asia to put on some risk, with crude oil leading the pack up 1.2% at 53.26. Crude has been in a downtrend. The DAX follows up 127 points, 1.08%. The Russell's up 12.8 points, 0.87%. The yen is off. The Bund is off 43 ticks. The bonds, the U.S. bonds are off 9 ticks. The 10-year notes are off 6 big ticks. Actually, 1.5 ticks, and the dollar's off 6 cents. So that's that. The other thing that may be part of the theme today that may impact us is it's the beginning of Yom Kippur. It's the biggest Jewish holiday. It starts at sunset today, I believe, if I'm not mistaken, and it involves a fast and so forth. And I think the greeting is Shana Tova or something like that. Anyway, hope you have a good observance of Yom Kippur if that's something you observe. It's a small world, one human race. Anyway, with that being said, the overall picture is that we've crept overnight and tagged the low of Monday. Low of Monday at 29.34 and a quarter in the ES. We went right to the tick and came off. The overnight session is actually engulfing yesterday's entire session with the point of control 29.17, also a stock zone. Also a stock zone. So that's where, oh, it started last night. Okay, I apologize for that. In either case, it could have an impact on the markets. Generally, this holiday causes many shops to shut down, and because work, I believe, is not permitted, and it causes for lower volatility, lower volume. We'll see how it goes. So this is where we stand. Let's take a look at what was expected yesterday and then compare that to what we actually got. Yesterday, the primary expectation is for an open auction out of range that starts to move up, or what we call become responsive. I was looking for it to go as far as 34 and a quarter. Of course, 24.75 is in the way. And then eventually I was looking for it to start pushing down into the 2900, scramble at the 2900. The extended target would have been 2890, as you see here in this stock zone. So these are the key areas above and below right there. And so what did we actually do? Here's what we actually did. We went to 29, 24, 75. So it hit that area on the dot. It could not revert back all the way to 34 and a quarter. The overnight session last night actually did that. And then where did we go at the low? 28.90.50 against the 28.90. It seemed like scenario one was played out pretty well, but in reverse, scenario one was looking for an open that would be responsive potentially as far as 34 and a quarter, turn, consolidate into 2905, 2910, 2905, 2900, and then bounce or extend out to 2890. We didn't get the upper end of the range, so the range stat was in play, and the range stat would have had us trade the same range down into 2890. Statistics still describing how the market is operating and what is considered normal and what is not. Yesterday was quite normal, and so that's where we ended up. Now, I started out this week, and I know I'm repeating myself here because repetition is important. Um, I started out this week by saying, look, guys, the weekly one-time framing up ended not last week, but the week before. Last week established one-time framing down. So any push up is likely to run into a lot of overhead, and it's likely to run into some stubborn resistance up above. So I expect the buyers would have a very, very hard time holding higher prices. This is how we started Monday. And then on Monday, we ended up testing 2960, which is a big area, and failing and rolling over and finishing down. Although we didn't have a neutral day, we ended up finishing down at the lower end of the range Monday. We gapped down yesterday, tested down, tested up. We finished down on a neutral extreme close down, um, which is further feeding into that whole lookout. Sellers are likely to be in control, as they've indicated already. The VIX is up to 20.3 on the CBOE. Overall, the market is weighed down and is facilitating price discovery to the downside much better than to the upside. Okay, so that's what we're seeing overall, and what I talked about Monday morning pre-market is playing out. And in general, I'm pressing the short side much more than I'm pressing the buy side. Although yesterday had some wacky stuff with Fed's Powell speaking, saying that they will remain accommodative and that the economy looks like it's to slow down, but he expects that they can still meet their mandate of 2% inflation, and that they would be taking steps to make sure that that continues, that they're supportive of the market. So overall, that should have really blasted us off from right here up into 29.44 at least. And the market just took it to 24, took it up about 10 points, took it to 24, and then immediately, boom, sellers come in and they take it right into the close. Yesterday, although we had the delta above the zero line, we spent most of the day below the zero line in terms of price. Remember, the zero line is the opening print that's marked in green right here, 29.16. It's these little green dots. Even though the aggressor volume was above zero, the price was well below zero the entire session. It just seemed like there was an attempt to be an aggressive buyer, but price was not playing along, was not playing nice for those buyers. So I expect more of that today. I expect us to kind of play that out some more. As part of our review, let's continue to take a look at what we've got in the overnight session. The overnight session is a little bit bizarre in its shape and format. Look at this high volume node here. The market has really found its equilibrium at this 29.16 area, which coincides with yesterday's IB high, and the day before that, the overnight session from yesterday, uh, point of control. And it's really finding this area to be quite satisfactory, quite balanced, and it's holding steady in this range. We're above mid, above VWAP. We have really good volume. I expect that we will have uh, continued um, continued volatility today. We have quite a range in the overnight session. This is an unusually high range, almost 50 points, and so that's where it stands. Overall, excess high. Look at this thing. Excess high, very little volume, traded up there. There was some pretty good volume on the bar push up. There was a good volume involved in generating this bar, but because not much traded in these highs, this is an excess high, another indication that we are likely to see sellers popping in here in the 29, 26 and above area. I expect this is likely to be fought if we continue to move up into today's session. We'll see how it works, but this is what it's indicating. We had a bit of an excess high yesterday. We have an excess high at these same prices. You can see it right here. Every time it pops into that 22 to 26 area, you have sellers stepping in. There's an invisible shield right here. And we'll see how that's treated on the open. My expectation on the open is we're likely to move through the mid and test down into 2905 and 2900 again this morning, taking back some of these gains that we've made overnight. That would be the thing that would support the narrative as it stands. And again, we're not trading some isolated thing. We are trading the narrative, folks. We are looking at the story and trading the overall story. Here's where we are. We've got overlap on the profile. So let's put on some volume shading here and see what this looks like. I'm going to extend this out a little bit. Boom. No, more. So we can see it a little bit better. This is the zone that we're trading in right now, and you can see the MC that I've just put up. Let me send it to the back so you can see the bars behind it. So you can see that, you know, we had pretty good balance these last 2 days of last week, or I think it was Wednesday, Thursday. Then we had a little bit of balance Friday, Monday. Monday tested up to 29.60 and came right off. Very important resistance area right here, 29.60. And we came off, and then we have a gap down, and we sold off. To me, we're headed back towards the MC point of control right here, 88. We stopped at 90 yesterday. That was the remember 88 was 88. Well, 90 was the target yesterday, and it hit it. Stopped at 90.50. To me, it looks like it looks like I'm likely to fade any pushes up, and I'm looking to aim down at the 28.88 again. I expect that this high volume node in this area is likely to be in play and to be a magnet or a tractor beam or kind of a gravity pull for prices going forward. Let's take a look at the order flow. Very interesting order flow overnight. This is CT Bookmap. You can get it at ctbookmap.pro. Overall, you know, we've had a couple of surprise moves. You can see it right here. A couple of decent surprise move. The CVD reflects that. And then overall, we've just been kind of drifting ever since we made that spike high. There's another spike right there. You can see the spike in volume, corresponding spike in volume. And then we've just pulled right back. There was a collision here. There's this volume that ended up canceling, and you can see it moving up a little bit right there and colliding. Those got filled, and the market started to retrace, and it reloaded right here at 22. The areas above us that have some liquidity, as you can see, is 28.50 to 30.50 and 26 even to about 27 are well offered, but the offer has not been here a very long time. Underneath us, the bid is from 93 to 94. Again, it just kicked in late in the European session. I don't believe this offer down here is going to stick around very long as we push lower. Other than that, the order flow is not telling us very much in the overnight session, other than the fact that buyers have been more aggressive in the overnight session overall because of those news events. So that's where we stand. Now, let's take a look at what we're expecting in the current day in terms of what is likely to happen. Here it is. We're looking at a market that's opening in value, in range, in value, in range, in value of yesterday. My expectation is under those conditions, an open auction. I'm looking for the market to test up 29.17, potentially 29.22, and I'm looking for an impulse down that brings us down into yesterday's point of control, 2900, get tangled at 2900 for a little bounce, but ultimately I'm looking for the market to give it up and get down into the overnight low, which is the MC point of control for this region, for this recent action. Remember, I showed you that on the red profile just a minute ago. That's all that was held by the overnight low, and I'm expecting that to get tested and for us to push through a little bit before we get a bounce into the close. This is the primary scenario. It's a relatively high confidence scenario. I expect that the market is likely to fail to push higher given the circumstances. Now, listen, this all gets thrown away on news, and news forces participants to revalue the product, and when we revalue the product, we seek different prices. The higher time frames participate, either putting risk on or off, and they couldn't give two craps about my gray lines, my stock zone areas here. They just push. The secondary scenario is a drift up and then a consolidation, and then the market just sits sideways through the session. And then if we do get any news type of events or anything like that, we're looking at a market that is likely to just grind and squeeze the way we did on last Friday, is to grind and squeeze back into that 34 and a quarter, and then a breach into that prior high before we back off into the gap zone. That's the secondary scenario. This kind of movement here is not expected to be impulsive. I expect this to be slow, tedious, luring, pulling in some shorts and then squeezing them out, pulling in some shorts and squeezing them out, and so on. It's the churn and burn type of rally. Expect it to be fairly slow, grind up. Be careful you don't get caught up in this trying to short it, expecting to fade the excess high. The failure at the excess high is expected to be quite fast. It's expected to push up, and I expect those who saw this as an excess price to step in and see that as an opportunity to take advantage of a higher price, sell in, and move prices lower quite quickly. And in that case, we'll get scenario one. Hopefully that all makes sense to you. If it doesn't, it's all right. Hang in there. Overall, it takes time to absorb all this stuff. Pay attention this afternoon. We have Fed's Powell at 11 a.m. Eastern. Of course, we get the crude inventories for those who trade the energies. We've got wholesale inventories at 10, a half hour after the open. They may or may not be a mover. generally has been low impact, but the market's paying very particular attention to economic conditions. Wholesale inventories may give us an indication they're expecting zero point 0.4. Then we get crude inventories, but then we get Fed's Chair Powell again, who can easily move the markets at 11 a.m. And then at the same time, Fed's George, and then we get the FOMC minutes at 2 p.m. That's likely to move us around. And then we expect throughout the day some sort of stuff about the China delegation here in the U.S., the U.S.-China trade talks. So all of that is kind of happening at the same time. Good luck today. I'll catch you tomorrow morning. Take care.